Up next, we have a really amazing conversation with two FinTech founders from here in Austin. The first is James Garvey from Self Financial. James, it's great to see you. And he has been crushing it here in Austin over the last several years, and really excited to have him in conversation with Jason Bornhorst, who built and sold a company a few years ago, and now has started another company in the FinTech space called First Dollar. So with that, I'm going to hand the microphone over to you guys and let you guys have a fun conversation. I'll see you later.
Awesome. Thanks, Amos.
Thanks. Well, listen, guys, I'm James Garvey. I'm with Self. Got Jason Bornhorst from First Dollar. We're going to have just a candid discussion about a couple people running two companies in Austin. I met Jason when I was, I guess, 2015 during TechStars, and you were running your previous company. What was that company called, Jason?
Patient.io.
That's right. And so you went through the TechStars cohort that was right before me, and was that in 2014? Is that right?
Yeah, I think we were actually in the first TechStars Austin cohort, if I recall. And
wow.
we officed out of the 5th floor of Capital Factory, which at the time was a bunch of like really crummy lawyer offices, and has since been redone into all the awesomeness that it is now. And so that's kind of where we started.
That's awesome. And tell me a little bit about your new company. Like when, where, how, why'd you start it?
Mm-hmm. Yeah, and before I do that, it's useful to get a little bit of kind of where I'm coming from. So as contrasted to James, who sort of I would put in the short list of one of the few people in Austin who really understand FinTech well. First Dollar, we're a new FinTech, we're less than a year old. That's been an area I'm rapidly learning about. Where I'm coming from is healthcare. So the business we founded and sold just prior was a care management company acquired by Athena Health. So spend 5 years getting every cut, bruise, and scrape one could in healthcare. Learned a heck of a lot about what is and mostly isn't working from a patient's point of view. Athena, they do billing for about 13% of the country. And so I had a front row seat for a couple of years into sort of every claim, bill, and transaction kind of moving through healthcare. And what we've decided to do with our next act is to tackle that head on from the patient's perspective in the form of building a really amazing health savings account. So for those who aren't familiar, health savings is basically even better than a 401k. It's triple tax advantage. Every dollar you put in, that you invest and that you buy on healthcare, totally tax free. And for young and healthy people, kind of the type probably listening to this stream, there is no better way to save for and buy healthcare than an HSA. And the reason First Dollar exists is we think that is a hard enough problem that it deserves a better solution than just a typical checking account. Any other HSA, here's a checking account, here's your paper statements, go forth and you figure out your deductible on your own. What we're trying to do with First Dollar is build the full stack solution. So we consider the entire deductible our problem, and we're building not only a great HSA, but also shopping tools to fully navigate that. And that's what we're up to. We are 11 people strong, less than a year old, and based out of South Austin.
Wow. And how much money have you raised today?
We have raised $5 million. So we raised that from Next Coast Ventures, one of the preeminent firms right here out of Austin. And then Meridian Street Capital out of New York City also participated in that round. And our funding is also quite timely in that we literally closed the round like 30 days before everything melted down.
Wow.
So that was also kind of interesting to experience.
I've got a kind of a similar story, at least about the latter, not the former. I started Self around 2015, and went through the TechStars Austin 2015 cohort, Jason Seats, and basically like I was looking for a way to build credit, and I hurt my credit score because I wasn't paying attention. I had this credit card that I thought was on auto pay, and 2 months in my billing cycle, I realized I made a mistake, and it wasn't on auto pay, and I hurt my credit score. So I was trying to figure out how do people build credit, and it's pretty tough. So basically, we started Self with this idea that we would create a savings plan that builds credit. That's how our first product works, and morphed into a credit card. And so as of February, we closed our most recent round in February. We had raised about $37 million total in venture capital. We're about 100 people. We're Series C's in Charlie, and it's been fascinating. We've hired about 50 people in the last 6 months. Onboarding people digitally, it totally different experience. Not being able to see people, it's crazy. And so, with your company, I know you're in the office today, so am I. Don't tell anybody, but right now, how many people in the 11 are working in the office, and what has hiring been like, and how have you guys been surviving the last 6 months?
Yeah, so just to give a sort of picture of our growth, so we closed financing kind of right before COVID hit. I think the team around March, April was maybe like 4 or 5 people. So this is like the co-founders and the people that we've already worked with. So like a really close-knit team. Yeah. We've since added another 5 or 6 individuals. And actually just until a month ago, many of those folks I had only met digitally. So they live in Austin, friends of friends type of arrangement. We did all the interviews virtually, and they had been working with us for many months before I think we've finally gotten to the point with COVID processes and things that kind of a socially distant happy hour made some sense, which was kind of a really weird experience. It was, startups are hard enough, and I think it's actually particularly hard to do this early stage, totally behind Slack, totally behind a TV screen. So what we've ended up doing is in the last month or two, we actually have moved back into the office. We took advantage of a lot of deals that were on the market. And one thing that's unique for us is because we only are 11, I think it's possible to occupy a space like this safely. And any given day, about half of our company is in the office, so about 5 or 6 people. But I'd be curious, James, how you're navigating that, because I think with 100, it's probably a very different proposition.
It's crazy, right? Because half of our people haven't seen our office, and as a founder and CEO, like I'm sure you worry about this all the time. Is like, how are you building culture, and how are you making sure that your people are connected and everybody's ostensibly rowing in the same direction. And it's hard to do that over Zoom and Slack, but that's what we're doing. And so we do weekly stand-ups on Fridays. We try to have everybody do one-on-one with their manager at least once a week. We try to do things we can to keep people connected, but some people are just craving for to be around other people, and so we're allowing up to 15 people in our office right now. But honestly, there's only been maybe 10 people at a time that have come in at any given time. So 10 out of 100, it's 10%. I mean, it's a small number. And, for me, like, I can't work at home. I go crazy. Like, I love being in a different setting other than the one that I'm living in. But, I worry about culture all the time. And, I got to imagine that, I can't even imagine how hard it is having 11 people and trying to build culture, at your stage in this environment. And so, like, what do you guys do that's like unique? What are some of the cool things you guys do to celebrate wins, and how do you keep everybody, rowing in the same direction?
Mm-hmm. Yeah, so we've been playing with a number of stuff, kind of within the past 4 or 5 months, sort of this totally virtual period. Anything from like a good morning question that everybody answers on Slack. So we'll kind of have someone in the company appointed with sort of just triggering an icebreaker, frankly, that sort of sounds silly as I sit here and say it, but has a really natural effect of like getting some conversation going around the sort of virtual water cooler, as it were. We have also been scheduling kind of what we call morning coffees. So they're just totally unstructured time to just sit and catch up about anything non-work related. And that's fit nicely kind of on Monday and Friday to close the week. Other things we've been doing is sort of trying to figure out what kind of games can be played in a Zoom happy hour type of format.
What have you found?
Honestly, so we both went through Techstars. I think you probably recall playing Werewolf.
Oh my God, you're playing Werewolf? I'm so jealous.
It's
doing that. I totally forgot the Werewolf.
So for those not familiar, it's kind of like a game of manipulation. It's one that it becomes very useful to know your opponents to become better. So it's a great team building activity, and actually totally works over Zoom. There's a way to do it, and so that kind of stuff's been useful for us. But now in the last month or two, with kind of COVID processes getting a little bit sort of more certain, we just did socially distant pumpkin carving, which frankly was awkward as fuck with everybody wearing masks. And like, there's some people there that I had just met, but been working with for 3 months. And part of me is like, every cell in my body is like, this feels weird. But I think that's a small price to pay to start inching towards kind of a team that really works. So, yeah.
You know, one of the things that, you know, I've kept up after Techstars is, you know, every Saturday I send a brief update to all of our shareholders and all of our employees. And in other words, I send an email every Saturday to everybody. And I've been doing that for 5 years, which is crazy to think about. But I love that concept that Techstars, you know, instilled. And you know, how do you keep your shareholders and employees updated in a written format? Do you do like a monthly, quarterly update, or like what kind of communication style do you use outside of Slack?
Yep. So we have settled on a monthly update. So my cadence is sort of end of the month. There's like a defined set of activities that'll happen right on time. And so the first of which is I take literally about 3 hours to sit down and write a really concise description of what we've been up to and what we've learned. And frankly, for how short that email actually is, I think this is one, like, if I had any more time, I would have written a longer message type of deals.
Yep.
So I send it out to investors. That same thing then gets forwarded on to employees. So we have a very transparent culture, everything from finances to things that went well to things that went wrong, also shared with employees. Then we do an all hands kind of QA on that. And that process repeats sort of in 30-day cycles. And for now, we're about a year old. We're planning about 30 days in the future. We're finding that's kind of a nice balance between long-term kind of agile trade-offs. And I think we'll do this monthly investor kind of cadence for the rest of the company.
Yeah.
And then for those listening, I'll also give advice for where I've screwed this up in the past. So in my previous startup, there was a time about 18 months in where frankly, I got a little lazy about the investor updates. I was like, things aren't changing that much. I haven't really heard from some of these people. I'm not gonna do this as often. And fast forward 24 months later, the company was ready to be sold. And sort of right as we get to the finish line, all the investors need to sign all the papers. Some of those relationships I didn't manage as well as I should have, came back to become a problem. And it took like another week or two of added stress to get the deal done. And simple things like fucking monthly investor updates probably could have headed that off at the course. So that's what we settled on.
Yeah, and the one nice thing also, just for everybody listening, is that, you know, regardless of the cadence, just being able to call, you know, one of the investors and say, hey, what's going on? Can you help me with this? I've got this problem, and having them totally know what's going on in your business, having them up to speed, and not asking like, well, how's the business going? You know, are you hitting your metrics? How much cash do you have? You know, like all those things that you know, investors crave to know. But you know, I think that a monthly cadence is a lot more, a lot better. And I don't think I can stop doing the weekly only because of people have been expecting it now for 5 years. Mm-hmm. But
yeah, and my other advice on this topic, just kind of given the entrepreneurship 101 topic, is as you write investor updates, I think it is really useful to put yourself in the shoes of that person who probably has invested in 20, 30, maybe 100 deals or more. Yeah. They probably spend 5 minutes a month thinking about you nominally. And so I think it can be tempting to just like export all of your project management goals into an email and like, look at all that we did. But I think probably what is way more important is framing the progress of the business in a way that is highly accessible to someone who doesn't have all the information that you do, because that is 100% the dynamic in an email like that.
And what's fascinating about that is that when you do it, in the way that you're describing, distilling it down to just the core is actually pretty hard.
It's really hard.
It takes a lot of, it's so easy to make a 100-page document. It's very hard to make a 1-page and shrink everything down into just the small sound bites. And your point about investors having so many other companies, their time is super valuable, and it's a great point. So, what does your hiring plan look like for the next 12 months? How are you thinking about where you are today and where you're headed?
So when COVID hit, we had kind of an interesting thought process, right? So I looked around, and a lot of the entrepreneurs that I knew were all like crisis, like laying people off, really pulling back. And we had just raised all this capital, and I was kind of trying to think through like, okay, should I change our plan? Should we do anything differently? We decided to make no alterations to plan. We have been hiring in the same way that we would if COVID were not a thing. And I think that that's because we don't exist yet. There just frankly isn't much to lose. And I think we have a bigger risk of not growing fast enough or not getting the attention that we need than we do from, say, running out of capital too early. So we have hired according to plan. We are now at 11 people, plus a number of contractors. I think we'll probably hold this for the next 3 to 4 months until we hit a couple more milestones. And then I think continue to grow. Most of our personnel are in the sort of product and marketing type of domain. Next year, I think we'll grow in the sales domain for us. Yeah. What about you, James?
We probably will end up being 150 plus or minus 25 by the end of 21. And, we're in this kind of fun stage where we can plan, 12 months in advance, which is totally different than we were, a year ago or 2 years ago, where we're thinking about the next 30 days, we're thinking about the next 3 months. So we've got quite a few open positions. And, thankfully, we've been able to hire some great people from Built in Austin and Indeed and a lot of referrals. We're finding that there's a lot of great people, especially in Austin, but even outside of Austin now, that we're like, hey, actually, we could hire people anywhere now. And, what do you think about that concept? Do you want to only hire people in Austin? Do you think you want to hire people that are in the US or outside of Austin, or what are your thoughts there?
Yeah, so COVID taught me a couple things. One thing that it taught me is I forever have been everyone in the same office adherent. Like when building a startup, I want everybody here. Not that I don't trust that you're doing the work, but like it's just way more fun when you can turn around and someone's right there to your left. And so COVID was a big adjustment for me, sort of teaching me how a startup could work remotely. And where I've netted out on this is what we do with First Dollar is we ask that everybody we hire in a full-time capacity live in Austin because it's useful to get together from time to time. But we're totally flexible on if you come to the office, once a week, twice a week, or frankly, not at all. We have an employee or two based in Leander who COVID is like that person's best thing in the world. As far as that person's concerned, they will never come to the office again. It's like heaven on earth. And I'm totally fine with that. We've adjusted our culture to support this kind of flexible idea. And what I think it's also allowed for as a nice perk is what's been really common in our company lately is people are like going to Colorado for 2 weeks to work out of an Airbnb, which I'm like, hell yeah, that sounds awesome. You should totally do that. Like, why wouldn't you do that? And I think it was really an aha moment for me to learn, at least personally, that actually something like that is totally awesome and fine, and you can be just as productive, and it doesn't mean that you're like a lazy employee or so on and so forth. And so I think our culture in a way will be better for it.
And so fast forward post vaccine, let's assume worst case scenario, it's in 22. Let's hope not. Let's hope it's much sooner than that. But let's say, vaccine's out, people have it now. Do you still have that attitude? Do you still think that you'll have that attitude?
I do. I think that we will probably run the company like that for forever. Yeah. I mean, I think that there's enough perks to it. I think that the rub is right now we're 11 people, and I think you can manage this hybrid culture. I'd be interested, James, in your perspective at like 100 or 150 or, even 1,000, right? Because I do agree that there is a bias that it is easy when you're in person with some people to just turn around and talk about something.
Yeah.
And I think that that's orthogonal to getting it into Slack or other mediums so that others can participate. So we haven't fully solved that yet. It's an intention. But yeah, I'd be curious what you think.
Yeah, I'm of the mindset that, we need to recruit the best talent, the best people, regardless of where they live. It'd be great if they could come in the office, but I think for us to be competitive, we're going to have to let people live wherever they want. If all the best companies out there are doing that same policy, we're going to have to do it just to make sure that we can get the best people on board. And so, I think like long term, we'll probably have 25 to 50% that are coming into the office on a daily basis, and the rest are working at home. So,
yeah, I think the office as hub philosophy really resonates with me. And, if I were a commercial real estate developer, I feel like that's how I would be betting my chips.
Yeah. That makes sense.
Yeah.
So, what do you think your biggest challenges are today?
So, specific to FinTech, specific to direct-to-consumer FinTech, of which we are. So just as context, so First Dollar is an HSA. Today, we are 100% direct-to-consumer. So you can go to firstdollar.com and sign up for an HSA. Sort of little known secret about HSAs is many people get them from their employer, but it's actually the only benefit. You can totally move yourself. So anytime you want, you can switch to a better provider, one that maybe has better investments, lower fees, things like that. So that's the audience.
Healthcare, right?
Totally. I think that's one of the things I think about the business that's really cool, right? We're so used to changing employers every 2 or 3 years. And every time I do, all of my benefits changes. I have to go find a new primary doctor and so on and so forth. The HSA is the one thing that actually could remain constant. And so part of the bet of the business is, can we build an HSA so good that you carry it with you for your entire career, potentially lifetime? And this becomes the front door to how you experience healthcare, right? So like only 30% of people even hit their deductible to begin with. So most of people's experiences with healthcare, in fact, is out of their pocket in quite likely their HSA. So can First Dollar be the place that you go when you think about healthcare as a default behavior? That's the sort of thing that we're probing on.
Yep.
But to your question, right now we market direct to consumer, which has been a fascinating learning experience for me as a sort of a traditional enterprise guy. We are doing that as both a bootstrap to build a great product. We're iterating a lot faster this way, and then we'll take it into employer next year in a more traditional manner. Two hard things about our experiences this year. So what happened post-COVID? Well, interest rates dropped, and that has a huge effect on FinTech companies. So one of the ways all these FinTechs make money is net interest margin. So all the deposits that they take in, they're making a percentage of that as the banks lend them back out at a higher rate. In many ways, that's linked to the Fed funds rate. So if interest rates are now 0 to 0.25%, well, all those revenue lines are greatly, greatly diminished. That's not a huge problem for us now. It will become one later because we're still sort of subscale. But that was kind of a big change to one of the core assumptions of the business. The second, I would say D2C advertising has been shockingly expensive as we move into Q4. Yep. And so what we've observed is basically the last couple of months, anyone who advertises online has been basically hoarding their budget, kind of waiting for things to get figured out. And they're now dumping that en masse into Google and Facebook and things like that. So actually just recently we've turned off Facebook advertising just because the efficiency has just gotten so out of whack, and we'd rather just save the money for a few months and then deploy it in January when it's more efficient. So.
What strikes me is kind of interesting is that, your company and my company are both doing some things that are interesting, but, you have to first educate the consumer on, why it's important, what the product is, healthcare. When I think healthcare, I just think, oh man,
eyes glaze over, like,
terrible, like worst experience. And when I think like getting started with credit, and the credit bureaus, like the credit bureaus, like I just get a shiver when I say that out loud, right? Like, And that's what's challenging about doing D2C marketing, right? Is you're trying to acquire customers directly. We're not acquiring customers through partners. We're going direct to Facebook, direct to Google, just like you guys are. And absolutely, the customer's attention. People vote with their wallet, right? And so you have to be able to quickly sell them, hey, this is why I'm interesting. Look over here. And get them onboarded. So like, I just gotta ask, like, have you had any inbound interest from VCs lately? And if so, what's it been like?
We have. So, our experience raising the initial round was quite straightforward. I think we're benefited because it's a team that's worked together before. We've done this before. It's in domains we're familiar with, and I think that adds up to a backable story. But even post investment, 5 million, really well capitalized. That has not stopped investors from knocking on our door and seeing what's going on. I think what people are observing is you've seen a revolution in FinTech the last 5 or 6 years, right? Things like Chime, James's product, tons of cool stuff popping up, showing how, online banking, this is how it should be done. And in fact, can actually be the nerve center of about how lots of things people conduct in their lives. And I think that a similar watershed moment is occurring in healthcare. And the HSA, this sort of transactional hub of activity, seems to be a pretty reasonable bet on at least could possibly be a front door. So we have gotten a lot of interest. I am, for the most part, staying fairly focused. We're just building the business, trying to get the numbers up. We have plenty of money in the bank, but that's been my experience is that the market is still relatively hot.
Yeah, it's fascinating. I keep reading about these companies raising these massive rounds, and there's so much capital floating around. And we're seeing the same thing. We're seeing investors. People reach out to us and ask us questions. And listen, as CEO, you need to have the conversations, even if you're not fundraising. But it just seems like there's this massive flood of capital out there. Let's just pivot to a different subject. But I just think that on one hand, I'm so happy that. We don't have to fundraise. On the other hand, I'm so happy that I'm not starting a company today where I have to go fundraise, because you just imagine how hard it is to try to build a relationship with a VC today. If it's your very first time and you can't meet in person and you don't know anybody. And, that's why I went through Techstars. I went through Techstars because I didn't know anybody. I didn't know how to raise money. I didn't know, have any investor connections, and it was tremendously helpful. What's your advice to somebody who's just getting started, and they're in the middle of this and they've never raised money before?
Yeah, which is good. It triggers a thought to your last comment. So I spend a lot of time with new founders, new startups, and things, and obviously fundraising is a daunting process. It was for me the first time I was doing it. But I think, it was reasonably doable then. It's even more doable now, even in a COVID virtual kind of weird market, as it were. The thing that I tell to a lot of entrepreneurs is, look, you can't just do a pitch deck. Like, the days of putting money behind a pitch deck are over. You do need to build a real business. And I also think that serves you. Just raising money is kind of exciting for a week, but at the end of the day, you need to turn that money into a return. And if you don't have a real business, it's actually going to be quite difficult. So if you can manage to get something scraped together that's starting to look promising, I actually think raising money, even as a first-time founder, is quite straightforward. There is significant capital seeking deals in the US, significantly more people writing checks than there are competent teams to back. And I think that's often a useful thing to remind people of, because in the sort of negotiation of fundraising, the commodity is the money. The thing that is unique is you and your deal. And so, don't feel that you need to be rushed into something and don't have time to do it properly.
Yeah, one of our investors said something that's always stuck with me, and that's no deal is better than a bad deal. And that's whether it's fundraising or whether it's a contract. You can always walk away and say no, and
Mm-hmm.
and I think that's no is a powerful tool.
Mm-hmm. And I think to that point, like actually no's are a useful tool. It's useful to take, frankly, a unhoned bad idea and get 80 no's on it, because at the end of that, it's actually going to be probably a lot better and something worth investing in. And so I think that's a useful process for anyone. James, you mentioned Techstars. I think Techstars, Capital Factory, YC, any of those incubators can be really useful experiences for people. I mean, even to this day, 10 years later, there are still friends from my Techstars cohort that I get beers with like every 2 or 3 weeks. It's been a lasting relationship for me. So,
yeah, that's awesome. Yeah, I totally feel the same way. And so, right now, you guys have a board. I'm assuming is it just 3 people, just you and one investor and co-founder?
Yep.
Just kind of a fun question to ask. If you could have any board member in the world, who would you put on your board?
Well, what's your answer to that, James?
What's my answer?
Yeah.
I'll tell you, Oprah. Yeah. I would love Oprah.
Yeah?
I think Oprah would be a fantastic investor, and she would provide a lot of value on the Self Financial board. So if you guys know Oprah, please let me know. My email is james@self.inc.
That's actually it's actually a pretty good answer. Yes, I honestly don't have a specific answer for this, and maybe this is partially some of my philosophy for startups at this stage, which is like, what we don't need is like more strategy in the room. We have a pretty good idea of what we want to do. Right now, it's like banging the nail every day, and it's pure execution. Yep. And so as I think about board members, I think the honest answer is for the next 12 months, we don't need that. But if there is someone who had a direct line into a ton of employers or consumers who could use what we're doing, that'd probably be pretty cool. And I actually think in that lens, Oprah's not a bad choice. But yeah, we are focused on the business is sort of my way of saying that. So
do you guys have like a chief marketing officer or who's in charge of acquiring customers right now?
Yeah, let me tell you about marketing. This has been fascinating too. So I am, just as my background, sort of grew up as an engineer, spent a ton of time in product in sort of various roles in startups. And so I'm very much a product engineering kind of guy. And in my last experience, got pretty good at enterprise sales. So that's sort of the lens I take. With this business, even though direct to consumer is maybe just a stepping stone or at least a single channel for us, I definitely underestimated just how difficult a channel like that can be. And it's been a huge learning experience for me this year, kind of really getting schooled on marketing and what good marketing looks like. I have never really had the history of working with a great marketer, and this has caused me to make several bad marketing hires in my career as CEO. I just so deeply want to believe, and I'm often not given that. But I think in the last couple of months, we have sort of hit a turning point, and I can now sort of in the same vein talk to you about product strategy or enterprise pricing. I'll spend just as much time talking about marketing foundation and target customer profile and the brand voice that we write stuff in, and like why this copy is good and this copy is bad. Because I do think that the details really matter, especially when marketing to consumers. I think it's interesting in enterprise sales, I so often want to oversell and then like scrape together the product to fulfill promises. I think with consumers, the opposite is true. You actually need to under promise and then over deliver. And if every detail is not perfect in terms of what you say you're going to do and what you do, it's just not going to work. And so I've learned a ton about that. James, I would be curious in your perspective, because you guys are way farther along. Yeah. Correct me if I'm wrong, but I think Self is 100% D2C.
That's right.
And so I'd love to learn about sort of how you think about that, what's worked, what hasn't.
Yeah, you know what's funny? I was laughing as you were talking a second ago, just because same experience. The first 3 years, I was the only person running marketing, and listen, I'm a software engineer by trade. I'm not a marketing guy, but the first 3 years, I was only person doing marketing. And so we, grew from 0 customers a day to, about 400 a day. And, at this point, about 2.5 years ago, we were ready to bring in our CMO. And so our CMO is amazing. I'll tell you a quick story. He joined in 2.5 years ago, and in the first month that he was with us, he hired 5 people that previously worked for him. So like, incredible that you can join and bring on all these people. He's amazing. And so today, we've grown about 10x under his leadership. But it's been exciting, because if I were to redo it, I would do the same thing again, honestly. And here's why. As a CEO, it's like being able to sell your product in the very early stage is so important. Being able to market it, even if you're not doing it great, just so that you have a baseline, and nobody's gonna sell it better than you when you're at that stage. And once you've proven out that, hey, there's actually a market for people that want to build credit. Hey, there's a market for people that want the first dollar's HSA. Like, then absolutely at some point you're going to bring somebody in and they're just going to transform, right? And that's what happened in our case. And I would say that if we would have brought him in earlier, we would have run out of money. And if we brought him in too late, probably run out of money too, right? Because we wouldn't have the traction that we have. And so it's a fun, interesting balance about, when do you bring in professionals, that are so good at their discipline, and what is the timing that you do it. And so I learned this way that we brought our marketing team in a few years in the business.
Yeah, I would even go a step farther and say, if I could change one thing about how we've approached First Dollar, my first hire would have been a marketer instead of an engineer. I would have spent the first few months just putting out amazing content and building audiences before I spent more, too much energy building out product.
I mean, listen, Facebook can be very, very expensive, and a couple of wrong turns, and man, it's a beat.
Tell me about it. Yeah.
Yeah. So, we've got a few minutes left. I thought we could maybe do a little bit of Q&A. I know we've got a couple of questions that have come in. So one question says, wouldn't it be nice for them to, they talk Austin for small talk and possible social? I'll move to the next question. Do you see consolidation in the fintech world, especially among services like KYC and credit scores? What do you think, Jason?
So I would say that appears to be happening. I think that this is definitely happening at the bank level.
Yep.
For someone new to fintech, like sort of how the world of banking works has been fascinating to peer into. But one thing I do think is true is, with all of consumers consolidating onto the sort of big JP Morgans and so forth of the world, if you're a regional banking branch, you don't really have too much left to offer, and you see a ton of those guys getting into powering fintechs now. And I think we'll continue to see consolidation. What's interesting is there's a finite amount of banking charters in the world. It's actually quite difficult to become a bank, and so if you want to do banking, you either need to partner with one or buy one. And so I think we'll continue to see consolidation there. Minor detail, but the HSA world itself is also consolidating. James, I'm curious what you think.
Yeah, and I think you're right. There's definitely going to be consolidation, and if I'm a big bank and I'm seeing fintech that's just eating my lunch and taking away my customers, it's a lot easier just to buy them, and then it is to compete in many cases. In terms of consolidation around KYC, KYC stands for Know Your Customer. Which is being able to say, hey, you are who you say you are. I think there'll probably be some consolidation, but the only challenge about KYC and credit scoring is that there's only so many vendors, right? It's like Experian, TransUnion, Equifax. They own the credit score business, and they also have a very big set of market in the KYC. So I guess we don't have any other questions right now. So
yeah, folks listening in, feel free to pipe questions in the last couple of minutes. Any topic is germane. Austin, FinTech, whatever would be useful.
yep. So how about your office? Looks really nice.
Yeah, so we leased this from another startup, and
So pretty.
it's about 3,000 square foot for what is now 5 or 6 people coming in daily. So a little bit overkill.
Yeah, that's
but
awesome.
I think a small price to pay just to get a little bit of face time. So
Absolutely.
yeah.
I'll tell you a quick story. So in my first company, we had an office in San Francisco, and over a course of a couple months, we were trying to hire some software engineers, and we kept having people we gave them an offer and they turned us down. And this happened 4 or 5 times. And so we looked at, okay, well, what's going on? Is our culture bad? Are we not paying enough? What are we doing wrong? And then we realized, hey, we're across the street from a homeless shelter and our office does not look very good. And so we then said, okay, we're going to get some nicer space. It wasn't very expensive, but it was still a lot nicer, and that problem never happened again. That's one area that absolutely do not want to cheap out on. I think because you spend so much time there, right? It's so important to have a nice office.
Yeah, startups are hard.
Yep.
Half the reason I do this is because it's fun. And so for me, it's just optimizing the life of my own life and our employees. Let's keep it as fun as we can. So let's see. Most surprising thing you've learned about the FinTech space, particularly Austin FinTech.
It takes a lot of money and it takes longer than you think.
Yes.
Yeah.
Let me think. I would say, in the capacity that you're partnering with a bank to provide your product, you may think that you're like, oh, well, this is how I get the product that I need. You are also, by the way, the acquisition arm for deposits for the bank.
Yeah.
And so I think that's a useful lens to think through. So.
Yeah. All right. What should be my area of focus for an idea stage startup trying to build a marketplace platform? Should it be marketing, the MVP, the business model, the team? I'll quickly say something. You've got to build a product that people need. Number one, you need to build a product that you love and that you're doing it because you're solving a real problem that you care about. You obviously care about healthcare, right? This is your second healthcare company. You're super deep into it. What else? What else am I missing here?
Yeah, I think that's good advice. I think at the end of the day, a business is like a secret hiding in plain sight. And I think that those are most rapidly available to people who have a deep domain or passion for some specific thing. So build that in a way that services you or services someone who you know a lot about. And I think that's probably the right way to get started. Another way of maybe answering that question is kind of through that content marketing lens. Why don't you try to write some content around it and see if you can build an audience? Might teach you a lot about what people think about this proposed problem. So,
do you read a lot of business books? I
don't actually.
Okay.
I used to, but I don't.
Yeah. I'm kind of a junkie there. I've read too many. There was a question about resources. The one thing I'll say is that the book Extreme Ownership was really fun read that I read recently. I've given it out to a few employees, and it's a simple concept, take ownership of what you do. There you go. It just saves you $12. What else?
Let's see. Are there new options coming online that look interesting, or is it all YOLO economics in your view? I don't fully grasp the question, James. Maybe you do.
I'm not sure about that one either. What about, how did you know when you found product market fit?
Let's both answer this. My opinion is that it is impossible to know that you haven't. It'll hit you over the head in the face because everything seems like it's working and you just can't keep up. And anything short of that means you haven't found product market fit.
Exactly. That's a perfect answer.
Yeah.
I think once once you're memorialized as the CEO of Google or Facebook, that's when you found it, right? Other than that, you still have a lot more work to do.
Yep. Let's see. Let's do one more question and we'll wrap.
Okay.
What are some good resources, books, websites for technical founders learning how to market B2C?
Yeah.
I'm gonna make a plug for Amos who introduced us. So he just put out a book, Sell More Faster. It's kind of like the basic recipe when you're going from idea stage to actually something people are repeatedly paying you for. And it takes a very kind of mechanical approach to like, what questions do I need to ask to de-risk this as I move from step to step? I think that's worth a read.
Absolutely. I have not read it yet, Amos, but I have it. So it's on my list.
Yeah.
Forgive me. Oh, you're on mute, buddy.
I was just thanking Jason for the plug, and thank you both. That was awesome. I really enjoyed listening to you guys talk about FinTech in Austin and what's going on, how you guys are managing through the last several months. Really, really fun. So thank you for participating today. Really appreciate it. And then before I sign up, see you later. Before I sign off for your host for the day, just want to remind everybody that the crawl is about to start. As soon as I shut off, there's going to be a quick video on what you need to do in order to participate in the crawl if you don't already know. And I'm going to head over there now. So I will see you there. Thanks a lot for a great day. Really enjoyed hanging out with everybody, and be good.
Startup crawl in Sococo. I'm going to give you a really quick tour to show you how to plug in and make the most of it. This is our custom map in Sococo, and when you land here, you should be in the lobby, which is over the Capital Factory logo, and you can see a whole bunch of people in there now, and it's going to be a lot more full by the time that you come in here. And this map shows all the different startups that you can visit and different partners and sponsors at the bottom in their own little rooms. There's a help desk on the left where you can go to get if you need to ask questions about how to use Sococo, and I'm going to show you real quickly how to make the most of it. So you'll see lots of different tables. Each of these little tables in the letters represent different startup organizations and startups. You can see the S is full of great groups like Techstars and Women at Austin and Bunker Labs and UT McCombs and Mass Challenge and the Entrepreneurs Foundation and the New Draper House. And then as you go across, you'll see other partners like the Texas Military Department and Army Applications Lab and AFWorks and Gwyn Partners, but also lots of startups like Gemba and Cratejoy and MadeBot and StoryFit and many, many more across all of the map. And then along the bottom, you can see a room dedicated to fundraising where you can go talk about fundraising with some of our venture associates and partners. And then other sponsors like Microsoft, Northrop Grumman, CACI, IBM, SAIC, Baker Bots, BAE Systems, IDA Ireland, and the University of Texas at Dallas. So real quickly, how do you use Sococo? How do you make this work? First thing is you want to set up your profile so people know who you are. And to do that, come here and click edit your profile. And the first thing I would do is on your Sococo name, I would change it and I would put your first name and then your company name. So when people hover over your avatar, they know who you are. So I'm going to put Josh from Capital Factory, or maybe I'll even just do Josh at Capital Factory. So that everyone will know who I am. And then next up, you've got your initials. That's all fine. And you can change your color. I like being orange. I'm already orange, but you can change your color as well. So now when people come and they see me and they hover over it, they see Josh at Capital Factory. So they know who they're talking to. So now, how do you figure out who to go, where to go, and who to talk to? Well, you can see the names of the different startups over their different tables. And then on some of the tables, you'll see little arrows pointing to content. So like here's Mass Challenge's booth, and I can click to register for the Mass Challenge 2020 awards, and it'll bring me to their website. Some have videos and other information, PowerPoints or slideshows, different info you can hover over to learn more about the company before you go visit. But then the main thing you came here for is to talk to people, to meet people. And so what you really want to do is click on each of these and go around just like you would in person to visit each booth and to talk to the people there to find out more about what they're working on. And the first thing you might do is just listen. You might just click and listen. So I'm going to click. I see a bunch of people over here in the Gemba booth. Gemba, I've been hearing about in the news lately. They've just raised a big round of funding. Actually, of course, not just in the news. I'm an investor, but you might have heard about them in the news. And really great company, started by Henrik. I can see Henrik's in the booth now because if I hover over him, I can see it. And then I can see a few other people too. And I know they're active because they're flashing. So when you talk, your little avatar flashes. And so now what I'm going to do is I'm going to go click on Gemba. And when I click on it, that jumps me into that room. And then where you go, you can see I've now got Kevin and Natalie and Alex in here talking. Now they can't hear me yet. So I'm going to come up here and turn on my audio by clicking the little green button here. Hey, everybody. And I can turn on my video too. And now they can see me, and all the four of us are here in a room together. And so everybody that's in one room can hear and can see each other if you turn on your audio and video. It's up to you. And there's Henrik. Hey, Henrik. So now they're all in the room together. We can talk and chat. And then also, if I go up here in the left-hand corner, there's this chat in Gemba, and you can see it opens up the chat. And that's where I can, send a message, or, someone might post a link or something like that to gemba.com. But as I said, there's also the links in the room, and I can drag the map up here to see what's in there. I can zoom in too to come in closer and see both who's in the room and what I want to click on. So thanks everybody. I'm going to pop into another room, but just showing everybody around. All right, so come over here to the Capital Factory table. This is where I can ask questions about Capital Factory, how to join, things like that. There's a help desk. Here you can find information about how to use Sococo, and we'll have somebody there to talk to you. But like I said, the most important thing is just clicking around, looking at the different startups, finding out who's here, and talking to people. And when you come in here for the event, every one of these tables is going to have lots of people at it for you to go talk to. And I'm really excited to see how it goes. So please come join us for the 20th startup crawl ever, but the first one ever virtually here in Sococo. See you there.